Hello and welcome to the Primist Propositions vodcast here, the LiveMore. I'm Matt Brown, Head of Mortgage and Protection Proposition, and I'm joined by our GI Proposition Manager, Nikki Hemmings. Hi, Nikki.
Hi, Matt. Hi, everybody. And again, as Matt said, welcome to our next episode of Hear the LiveMore.
Welcome indeed. So today we are joined by a special guest from LiveMore. We've got the Managing Director for Sales, Alison Pallett from LiveMore. Hi, Ali. How are you?
Hi, Matt. Hi, Nikki.
Yeah, hi, Ali.
Good, thank you. Great to see you both.
Yeah, you too. So I think before we get kicking off with the questions, Ali, let's learn a little bit about you. So tell us who you are and your background.
Okay, so Alison Pallett. I'm on my third anniversary with LiveMore Capital, which was officially yesterday. So 3 years in. Prior to that, I worked for a mainstream lender for 25 years. And as I have mentioned before, embarrassingly, when I first joined LiveMore, I was the only person who could actually get an interest-only mortgage for the over 55. Slightly depressing fact there for you all, but never mind.
Love it. Thanks, Ali.
So should we just press into the questions then, I think? So LiveMore launched in July 2020, so coming up to your second birthday. So congratulations on that. What would you say have been the key highlights during this time?
Oh, I mean, that's a great question, Nikki. There's just been so many. I would say one of the first things has been to really look and see the growth that we've experienced. So it was always very challenging joining in the middle of launching a company in the middle of a global pandemic. But we got out of the blocks and we've been lending since then. So we've seen a lot of growth in the marketplace. We've seen huge amount of proposition development from our perspective. I think for me, one of the big things has been our distribution footprint. So obviously on board with you guys and how many of your firms are starting to use us and are using us for repeat business has been really, really encouraging for me. I think, we've been expanding our sales team. We've opened another office in Bristol. We're looking at another geographical area to support our launch into Scotland, which was only just over a month ago. So there's just been so many things. It's been a real roller coaster for us, but in a really good way.
Wow, some great achievements and over the last 2 years. That's fantastic. So what type of customers are looking for an interest-only mortgage?
See, this is a really interesting question that we get asked a lot, and we've been doing a lot of market research around this about how to make this so that people understand exactly what it is we do. It's a little bit like, it does what it says on the tin. So we would say that we are an interest-only lender for anyone over the age of 50 up to 90 plus. Now, the 90 plus bit is quite an important part for us because our market research has shown us if we say that we are an interest-only mortgage lender for over 50s, then the people who are 60, 70, 80 and 90 think that this is not for them. And so we've tried really, really hard to make our proposition say exactly what it does. And in support of our 90 plus point, our oldest borrower is a lady who is 92 years of age. So when I say we do interest-only mortgages for the over 50s, it's really important to remember the bit about the 90 pluses, because we've got something for everybody from 50 upwards. So straightforward interest only.
Wow. Brilliant. Yeah. And I can see that on your background there. You've got the 50 to the 90 plus. So excellent.
Yeah. So the other thing that I would say is once we've established exactly what it is we do, I always think it's really important that we try to bring to light some of the customer groups that these products can help. Because I know when I'm out there talking to brokers, they're always sort of saying to me, well, where do I find these customers? Who do these products work for? And so what we've done over the time is we've established that there is actually probably about 4 key groups of customers where you can use these products really, really efficiently and effectively for them. So if I just kind of give you a quick whistle-stop tour on those. So the first ones I would talk about would be the interest-only term end customers. Now, we are seeing in the marketplace that a number of the mainstream lenders are really starting to ramp up the pressure a little bit on these interest-only term ends. Now, what they're saying to customers is you're at the end of your term, yes, we know you've paid us interest, we know you've been good customers, but actually we'd like our money back. And some of the letters that arrive saying that customers need to repay their mortgage at 30 days notice can be really disturbing for people. Now, I'm not saying that mainstream lenders are going to enforce that 30 days. They're trying to create some urgency there. But if you can imagine as a consumer being on the end of that letter, that's really, really upsetting. And what we find with our mortgages, that we can really help those customers because our affordability is assessed on the interest-only aspect of the loan. And that's why often customers who can't pass affordability with a mainstream lender can't get through their affordability calc because it's assessed on credit and capital and interest. They will pass on our affordability. So term end customers are a definite key group of people to look for. The next ones I'd say would be people who thought they could only get equity release. Now, equity release is a fantastic product out there, and the marketing that's been out there and the money that's spent on it is absolutely amazing in helping us all grow the market. But there are simply a number of people who are just, they're too young for the loan to value that they require. Their property doesn't suit the more stringent property underwriting criteria, whereas we underwrite in the same way that a mainstream lender would against property. And some people are just ideologically opposed to an equity release mortgage. So I know they've come on in leaps and bounds over the last few years, but sometimes this product can work really well for those customers. Next one, I'd say mortgage prisoners. Again, this is back to the point I was making. They're trapped in lender back books on SVR. You can often get them out of a lender's back book onto a fixed rate product, a 10-year fix. There's never been a better time to fix with rising inflation and costs. And you can really help that customer. And then Bank of Mum and Dad. And the reason we love Bank of Mum and Dad is if I'm a mortgage broker, this gives me an opportunity to write 2 deals. You can capital raise deposit on your own property to help your kids get on the ladder. And we've had some brilliant case studies of customers who've capital raised and been really generous in the amount of money they've given their children. And as a mortgage broker, why not write 2 mortgages instead of 1 for the same family? It's just, it's all about making it easier for everybody.
Brilliant. Thanks, Ali. That's great. And I'm glad you touched on affordability in that piece you just talked about there. So I guess, affordability and obstacles and all of that. So what do brokers need to do to get over that often reported affordability obstacle attached to interest-only mortgages?
Yeah. So I want to be a bit brutal about this. And what I want to say about this is don't use that as an excuse not to try. Now, whenever we go around doing training, and we do face-to-face training, we do Zoom training, we do lots of stuff around this, is people always say to me, I'd do a RIO if I could get one through affordability. And I say, yeah, okay, let's talk about the challenges around affordability, because we can't move past it until we do it. But because of the way we treat income and the variety of different types of income we'll take into our affordability calculation, I would say if you're looking at a possible retirement interest-only mortgage or a term-end interest-only mortgage, you only need to run a maximum borrowing calculation with us. If it fails our affordability, I would say pretty much your research aspect is done. We're very generous in terms of the types of income we'll take. So we take buy-to-let income, we take uncrystallised pension, we take investment income, we take self-employed income, we take employed income. And we'll take a variety of different ways of looking at that. Some of it is based on, how long pension pots last up until mortality dates. And sometimes it's just a common sense approach to, if you're self-employed and you're going to step back from the company, you're still going to enjoy the benefits of the income from that company. Why wouldn't you let someone, perhaps I shouldn't be saying this, don't want the competition to get onto this one. Why wouldn't you take this into your affordability calculation? And similarly so with, pensions. Sometimes people choose to not draw their pension down, most often for tax reasons, absolutely, totally no issue at all with doing that. But if you had a £500,000 SIP, self-invested pension sitting in the background, why wouldn't you use it in affordability? Again, yeah. Hope the competition aren't listening. So we say to everybody about LiveMore, okay, we'll never be the cheapest in the market, but what we'll always be is we'll be really strong on affordability, we'll be really strong on long-term fixed rates, and we'll be really strong in our criteria. So the call to action is register with us, and that's so important because that gives you access to our maximum borrowing calculator. Sits behind our firewall. Once you're registered, you can access it. You can start to put information into it. You can fiddle around with the information. If I could find this much more self-employed, or I could find this much more investment, or if I put the buy-to-let stuff in, you can see the output. And it is exactly as its name suggests. We will tell you the maximum amount that we think your customer could borrow. And then we go through some of the complexities around which product tier we're putting them on. And then obviously the advisor sorts out which long-term fix they need. But it's very difficult to go into those conversations without understanding the art of the possible in terms of what a customer could borrow from you. And that's what we encourage people to do. Register with us, mess around on our MBC, our maximum borrowing calculation, and see the art of the possible, and stop giving affordability as an excuse not to try.
Love it. Love a call to action on a vodcast, and absolutely call to action, register, noted. So thanks, Ali, that's great. I'm now going to treat you to 3 questions in one.
So okay, I might have to write them down.
Brace yourself. Are you ready? So you've recently launched that product range, LiveMore 1, 2, 3, and 4. I've seen a lot about it in the press. So I guess my 3 questions, which I'm sure you'll get across when you're talking about it anyway, are why have you created it?
Yeah.
What does LiveMore 1, 2, 3, and more mean for intermediaries?
Yeah.
And the third one is, what's the difference between each of those tiers, 1, 2, 3, and 4?
Okay, right. I've got that written down so I don't forget. I normally get to the third one and I can't remember what it was. Okay.
Thank you.
So, and before we leave, remind me to tell you about our unique proposition around mortgage protection policies as well, because this is another way for advisors to earn extra money, write more business, which is we also think is important. Right.
I've copied off you. I've wrote it down. Good.
Right, let's get to this then. LiveMore 1 to 4. Why have we done it? So it's our belief in this marketplace that people's lives and incomes and retirements are getting more complicated. I'm the last year, I think, of the official baby boomers. And so what we're seeing more and more is that people have got multiple different sources of retirement income, multiple different sources of actual income, and they've got some quite complex credit requirements. And so the reason we launched LiveMore 1 to 4 is that we think this is a really good way of covering those bases. So if I think about the types of customers, we all hope, when I was in the mainstream market, we all hope that we see a simple first-time buyer mortgage, simple applicant, 25% deposit, bags of income, no credit. We're all hoping for those mortgages. We don't see that many. So in this space, we have a product called LiveMore 1, which is for the really simple, standard, straightforward cases that we see. And they're out there. They're out there. So when I say simple and straightforward, this is people who are not particularly looking for debt consolidation, although debt consolidation is important to us. These are people who have got maybe just pension income and employed income, so really simple income streams for us to look at, and it's exactly the same as in the mainstream market. Those are the cases that should just whiz through the system really quickly, really simple. But we understand that not everyone has those types of lives around their income and their retirement. And so what LiveMore 2 to 4 does is it actually picks up more customers. So it means we can help more customers with interest-only mortgages, because we're going a little bit more around flexibility around the type of income we use. So this is where self-employed income would come in. This is where buy-to-let income would come in. This is where investment income could come in as well. And we're also going a little bit more down the credit line as well. So, you can have one more mortgage arrears payment. You can have slightly higher amount of satisfied CCJ or default. And so what this product range does is it enables us to help more people across a wider spectrum. So that's why we've done it. I think that's a little bit about what it does. And here's the difference. The difference it makes is it just gives people much, much more choice. So we do a retirement interest-only mortgage where, you'll all know this, it's open-ended, it doesn't have an end date on it. And we also do a term-end interest-only mortgage, which takes people up to the age of 80. It just gives a greater amount of flexibility in terms of the options that are available. Now, of course, that can mean the broker's got to look a little bit harder. We don't just have one product price that goes across our entire product range, but nor does anybody else. So we see ourselves as really starting to get into the nitty-gritty of the simpler cases, the much more complicated cases, and that massive raft of cases that sit in the middle. And I'd be very confident that we've got something for everybody in there, provided you're over 50 and want interest only, that is.
Sounds good.
Yeah, fantastic. I mean, it kind of makes sense, doesn't it, to kind of grade them almost and call it the LiveMore 1, 2, 3, 4. So yeah. After everything that you've said about this, I kind of feel like I've heard quite a lot about LiveMore now, but I will ask, what would you say makes LiveMore different from all the other lenders in the market?
Okay, so what I'd say about LiveMore is that we absolutely only focus on interest only for over 50s. Now, what that means, so there's some great building societies out there, there's some great competitors out there, but they have a really wide product offering. And this retirement or this later life stuff is just one small part of it, whereas actually this is all we do. So in the 2 years that we've been live and out there, if you can imagine how much we've learned in those 2 years just by only being in this market. So first of all, we started off on just retirement interest only. We then saw from that there's an opportunity to pick up cases that you lose, and that's why we launched into the term end interest only side of it, which meant we could lower the age to 50. And the next developments that we're looking at, we launched into Scotland. So what we're doing is we're on a real, if you like, a roadmap of the things we want to do. So what makes us different? So we speak to, we let advisors have access to our underwriters. We speak to all of our customers about vulnerability, so you don't have to worry about vulnerability or potential vulnerability. We make a pre-offer call to all of our customers, nothing to do with the advice, nothing to do with the advisor, just to say to them, this is who we are, this is where we are. Is there anything you need to tell us that you think could mean we could help you a little bit more? And that's often where we pick up hints and tips about potential vulnerabilities, really common sense things. So I think we're pretty unique in doing that. In our uniqueness, I'll also talk about our approach to bridging any affordability gap. So we've talked a lot about affordability. One of the things we do, and we are the only lender that does this, is that if you do have a small gap in affordability, because often pension income can be skewed to one partner, the advisor could write a term assurance policy to bridge the gap. So what we find that works really well in doing is, once you've helped to identify there is a shortfall of income, often on death of first, you can write this term assurance policy to the age 90, and it will bridge the gap, and it'll either deliver a payment to reduce the mortgage, which makes the mortgage affordable for the person who's left, or it will produce some income to help pay that. Now, from an advisor's perspective, it's this whole thing about it's a second thing, it's a multiple sale within the mortgage. I mean, obviously we would take the payment and the premium into the affordability calculator, but we often work with the advisors to try and work out where we need to pitch that. That's pretty unique against us. And then the final thing I'm going to say that's unique about us is that we have what we call our ongoing care fee. Now, we're renaming this to our ongoing procuration fee because we think it much better describes what it does. So we pay our gross procuration fee to the network, and then every year we pay an additional procuration fee up to a maximum of 15 years of 13 basis points. And what we ask the advisor to do, we ask the advisor to make a quick call to the customer, quick check-in call. We know all good advisors do this anyway. And then just let us know if they've spotted any potential emerging vulnerability. Now, the reason we do that is that we know that customers they'll tell their mortgage brokers a lot more than they'll tell their lender. So we're leveraging the relationship. And we just want to be very aware if there is any initial problem that could be coming down the line. Often people have fallen into a vulnerability category and it doesn't affect their payment, or it doesn't affect their finances or anything, but it's just a really, really good thing for us to know about. So we had a customer who asked us if whenever we called, we could always just check that his wife was there, because he's slightly hard of hearing. He likes to put the phone on speaker, and 2 people listening to the message is better than 1. I mean, what's difficult about that? But had we not made the call, we wouldn't have known about that. So yes, we think that makes us unique as well. So our ongoing care fee or our ongoing procuration fee.
It was the ongoing care fee that I was actually going to touch on, kind of as my next question. Obviously, I know that you launched that last year. I know you've got into that quite a bit. The questions I was going to ask you on that was, I think you've covered like a bit of it off as to why, but it was going to be kind of, how does it work?
Yep.
Why did you decide to launch, and basically what can a broker earn? They all want to know that as well. So
I mean, to be fair, I mean, we do also have a I don't think there's anything wrong in having a principle that we should all be paid for the work we do. And so we know that brokers often have a check-in call with customers, and so we're saying have your check-in call as usual. So what will happen is in November, so this year will be the first year when it starts to happen, any cases that have been written where the broker has selected the ongoing care fee will receive notification from us of the clients. So we'll send notification. The broker will then, go on and give the customer a quick call, or their admin support can give the customer a quick call. It's important to remember it's not an advice check, so it doesn't have to be done by the original person who gave the advice. And then they'll just see if there's anything, just have a general chat with the customer, and then see if anything emerges from the call that might be worth letting us know about. Obviously seeking the customer's agreement that they can share that information with us. And then you just send us a note back to say we've done it, and then we just send 13 basis points. So if you think about that on let's say a £100,000 case, that's an extra £130 gross per year. I'm going to try and do my maths quickly now. Let's say we paid it for 10 years. That makes the maths a bit easier. That's an extra £1,300. Now, most people don't just write £100,000 mortgages, do they? They write £300,000 or £500,000. So you can see that very quickly this adds a really, really strong, in effect, income stream that builds embedded value in the firm. So it's gone down really well. And as I think I have said, it is unique in the marketplace.
Excellent. So, you've talked about launches that you've already done this year. I guess the $1 million question is, what can we expect to see from you guys for the remainder of the year? What are you most excited about in LiveMore, Ellie? Yeah,
well, to be fair, we're always busy working on the next thing. So hopefully by the time the vodcast is live, we'll have made a really exciting announcement about our procuration fees. Don't want to say too much about that at the moment, just keep everybody intrigued about it. But it's a really good news story. So we're doing some work around our procuration fees. We launched Scotland just over 4 weeks ago. We've launched LiveMore 1 to 4. We are looking at some different propositions in the marketplace that we hope to have out by July, August time, which will be really, really exciting. But I'll be shot if I say too much about them.
Don't break any NDAs on recording, definitely.
But trust me, I feel as if I need at least 5 extra days in the week to get through all of this stuff. There's loads of really exciting stuff coming from us, and we will be looking. So we'll be looking to develop the theme more around the LiveMore 1 to 4. And so that will be an ongoing theme for us, looking to develop that, tweak that, enhance that, make that better so we can reach more people.
Lovely, thanks, Ali. And the last thing, because I wrote it down on my pad, is you said, don't let me go without talking about the unique mortgage protection policy. What was that?
So this is the point I was making about how you can bridge a small affordability gap by writing a term assurance policy. So I know that writing protection policies is so important to everybody. This can be a really, really good way of actually helping just get the deal over the line, the final bit. So that's that. And then the other thing I just wanted to say before I go is you can use our products for most things. So provided it's on your main residential property, you can capital raise to buy a holiday home, you can capital raise to give your kids some deposit. We can do some debt consolidation, home improvements. The list is pretty much endless, as it is in the mainstream market as well. So it's a really, really flexible product. If you go to the website as well for advisors, we're often conscious of the fact that sometimes advisors feel a little bit nervous if they're working in the mainstream market. You don't have to be equity release qualified to do this product. So there are some additional questions that could help advisors thinking about, what information shall I gather on pensions? So it's just simple questions like asking the type of pension someone's got, signposting them to the government gateway to find out what you're going to get on your state pension. There's some really, really interesting resources on our website at www.livemorecapital.com.
Thanks, Ali. And, you know, that call to action you mentioned about register, I can see on your background there's an email address, sales@livemorecapital.com. I'm assuming people can just write into there if they're having any difficulties.
Absolutely. And the other thing to say, we've got a very small sales team, but we're a very hard-working sales team. So if anyone would like a face-to-face visit, we're growing our sales team. If you'd like a face-to-face visit, if anyone would like us to do some training over Zoom, please get in touch with us. We love doing this, and anything that helps spread the word helps us.
Lovely. Well, listen, it's been lovely having you on the vodcast. I've certainly learned loads and loads and loads. So thank you, Nikki. What about you?
Yeah, I've learned a lot in the last, 20 minutes, I think. Definitely, yeah.
Good stuff. So, guys, remember the call to action. Get yourselves registered. Get in touch with the sales team at LiveMore if you need any more help. But thanks, Ali, for coming on the vodcast, and we'll see you again soon.
Thank you, Ali.
Thanks very much. Thanks,
Anne. Bye.
Yeah, bye.